In this video, I'm going to outline my exact thought process on what I would do if I was starting to invest in 2024. We'll discuss what I would buy, why, and how. And at the end of the video, I share with you some crucial points for beginners to watch out for. No, I do hope you understand that this isn't financial advice. It's just me giving you my opinions on what I would do. Hi. I am Simon, a senior finance manager with a background in economics and international finance and over 20 years of experience in the corporate finance world. Let's jump into what I would buy. I would invest in an S&P 500 ETF, and I'm convinced that this would be a smart strategy for many investors due to several key reasons. Number one, an instant diversification. It allows you to instantly diversify your investment portfolio. The S&P 500 index consists of 500 of the largest and most successful companies in the United States across various sectors, including technology, healthcare, finance, consumer goods, and many, many more. By investing in this ETF, you gain exposure to a wide range of companies and reducing the risk associated with investing in individual stocks. Number two, low costs. ETFs typically have lower fees compared to mutual funds and other investments. The management fees are often very competitive, making them a cost-effective option for investors. Number three, historical performance. The S&P 500 has a long track record of delivering solid returns. While past performance is not indicative of future results, historical data shows that it has provided an average annual return of around 7 to 10% over several decades. And this consistent growth can help investors to build wealth over time. So let's say you're earning $50,000 per year and you're investing 10% of your salary in an S&P 500 ETF. That comes out to roughly $417 per month. If you're gaining an average rate of return of 10% per year, here's approximately how much money you would accumulate over time. After 10 years, you could have $80,000. After 20 years, $287,000. After 30 years, $800,000. And after 40 years, $2.2 million US dollars. Wow! You see, the earlier you start investing, the more time your money has to grow through compound interest. Even small, regular contributions can add up significantly over time. Number four, liquidity and accessibility. ETFs are traded on major stock exchanges like regular stocks, which means they are highly liquid and can be bought and sold throughout the trading day at market prices. This liquidity makes it easier for investors to enter and exit positions as needed. Number five, it's a passive investing. Investing in an S&P 500 ETF is a form of passive investing, which means you are not actively trying to beat the market by picking individual stocks. Instead, you are simply aiming to match the performance of the broader market index. And this passive approach can be less time-consuming and less stressful for investors compared to actively managing a portfolio. And now let's discuss how to invest. Number one, choose a broker. The first step is to open a brokerage account with a reliable brokerage firm. There are many online brokers available that offer access to a wide range of ETFs, including the S&P 500. I've been using interactive brokers for many years now. However, I remember that at the beginning it was a bit confusing. When choosing a broker, there are a few things you should pay attention to. You want to ensure that you fully understand all fees, such as platform fees and trade fees. Additionally, it's important to compare tools and find what is most practical for you. I've linked 11 of the top-rated brokers in the description below, and I have selected these brokers specifically for beginners, considering key factors like customer support, account minimums, and educational resources. Number two, research ETFs. Once you have opened your brokerage account, research different S&P 500 ETFs to find one that meets your investment objectives and preferences. Look at factors such as expense ratio, tracking error, trading volume, and past performance, of course. Number three, place your trade. After selecting your ETF you want to invest in, place a buy order through your brokerage account. Specify the number of shares you want to purchase and the price you are willing to pay. And number four, monitor your investment. Once you are invested, monitor your finances regularly to ensure it aligns with your overall financial goals. rebalance your portfolio as needed to maintain your desired asset allocation. Overall, investing in an S&P 500 ETF can be an effective way to gain exposure to the stock market and potentially achieve long-term investment growth. However, it is essential to do your research, assess your risk tolerance, and consult with a financial advisor if needed before making any financial decisions. Here are some key pieces of advice from me. I often notice people getting caught up in the search for the perfect index fund or fixating on the performance of various investments. They stress over gaining an extra 1 or 2%, which can indeed make a significant impact. For instance, if you invest $200 a month for 30 years at a 10% return, you'll have $456,000. However, with just a 2% boost in returns, you could end up with $700,000, a substantial difference. But rather than dedicating all your energy to navigating the stock market, which may not be your expertise, I would rather view it as a vehicle to grow your wealth steadily. Instead, focus on enhancing your day-to-day activities, aim for promotions, explore new job opportunities, or acquire new skills. Imagine if you were able to double your monthly investment to $400 through a side hustle or a career advancement. In that case, you'd potentially reach $900,000. Of course, you don't need to invest solely in an S&P 500 ETF to build, for example, a healthy retirement fund. If you have access to a 401k with employer matching contributions, for example, it's wise to invest a portion of your money there to earn that full match. And remember, you don't have to make good decisions right away. You just have to start making decisions. Investing is a journey, and it's okay to start small. For the record, investing $100 monthly in an S&P 500 ETF for 30 years, assuming again an average return of 10%, should result in a future value of approximately $226,000. And you can always refine your strategy and make adjustments along the way. The important thing is to overcome the initial hurdle and take that first step towards securing your financial future. So, if you've been hesitating to dive into the world of investing because of the overwhelming choices, I encourage you to simplify your approach. Focus on the basics, choose a reliable broker and a well-established ETF, and most importantly, get started. Over time, you will gain confidence and experience, and your investment journey will evolve naturally. In the end, what matters most is not finding the perfect solution, but rather taking action and staying committed to your long-term financial goals. Well, I hope you found this video beneficial and inspiring. Please don't forget to subscribe to support me in creating more content like this. And if you ever feel stuck or require a boost of inspiration, remember, I am just a video away. See you soon. Bye.